If you want to get consistent wins like this every single day and get all these certificates and get notifications like this, but you are struggling to even take the right trade, I can help you with this. I've been trading for a little bit over 3 years now, and I've been through a bunch of different strategies that never really worked for me. Eventually, I found the one that was super simple and easy to use. Now, I share it with the people within my Discord and my YouTube, and there's a lot of people already making money from this. Now, to trade this strategy, you don't need 50 different confluences to enter a trade. All you need is 3 easy steps, and that's literally it. All right, so let's hop right onto the chart and let's figure out what this strategy is. The first thing is we are on MNQ, and let's figure out our daily bias. So the first step is figuring out your daily bias for the day. Now, we can see that we are on MNQ, and we are about to open on market open. We can see that this is about 9:30 in the morning. And we can see, if you look on the higher time frame, that, let's go like on the 15-minute time frame, we can see that we're actually sitting in this entire downtrend right here. And if you look at like the 4-hour, this is an entire 4-hour fair value gap that we're kind of retracing back higher, but then dumping down, and then retracing back higher, and then dumping down. And we can also see that we have this this previous day high sweep that London created. So this is already telling me right away that we're going to want to draw lower towards these lows, or potentially even these lows right here. Or if you really wanted to, all the way down here. Now, I'm not going to say that price will run all the way down here. However, I do predict that we can actually reach these lows and these lows, maybe even these lows. We'll see. So that's step number 1. Now, the second step is figuring out your draws on liquidity. Now, we kind of already just went over that. It's going to be the first draw on liquidity needs to be the sweep of the liquidity. So the sweep of the liquidity, and then finding your opposite draws. Okay, so let's go on the 1-minute time frame. And then as you can see, we are basically a minute, like we're about to open on New York session. And what we can kind of see is that we are somewhat trending upwards. If you look at like the 5-minute time frame, I'm sure that there's like a maybe like a 3-minute. We can see that there's a 3-minute fair value gap just right here. We can see that price retrace back into this, and we are making a move up. So this is already telling me that we want to see that sweep of London session high. Now, another thing I did want to mention as well, if you want this indicator where it gives you all the session highs and lows, it's called Lux Algo Sessions. Very simple. You kind of have to adjust the trading hours and stuff like that. It's pretty simple and easy to use. You can adjust the colors and stuff like that. But that's that. So this is exactly what I look for. Daily bias, or draws and liquidity, and then finding the entry point. Okay, so the first step was finding that daily bias. So we're most likely wanting to see bearish. Okay, now the second thing is finding our first draw on liquidity. What is our first draw on liquidity? Where does price first want to sweep? All right, like we just talked about, that London session high. Let's see if we can sweep that. Let's go back to the 1-minute time frame. New York session's about to open. All right, first candle. Kind of chop around, boom, just like that. All right, this is already perfect. Okay, now we got the second thing that we wanted. Now is going to be finding the entry point for us to make that move lower. All right, so we got the draws and liquidity. That was that first draw on liquidity. Now we kind of have to mark out where our other draws on liquidity is. Now, what I usually do is I like to target opposite liquidity points. So for example, we have this London session low right here, and it is this entire range of London session was about 100 and almost 120 points. So that's a perfect range that we have. This is a perfect liquidity point. Okay. Now, after that, from that London high to this Asia low, we got about 230 points, something like that. Those are perfect draws on liquidity. Those are realistic draws. Okay, so people might think that, you only want to target the opposite liquidity, but you could target even lower if you want, or even deeper into that liquidity, so you can catch bigger gains and stuff. Okay, so let's try to find our entry point. So let's keep moving on. So the way I like to find my entry points are inverse fair value gaps. And boom, literally what I was just talking about. We got the inverse fair value gap. We can see that price closed below. We are coming into this fair value gap. So there's a chance that we might want to, make it move higher. However, this looks like to me we're going to push through this and close below. All right, so let's see the next candle. Let's see what it does. Okay, perfect. This is exactly what we want. All right, so let's look at like the 2-minute time frame. Boom. This is exactly what we look for. All right, anytime you see like a very strong push up creating a fair value gap, and then a strong push down, that I call something like that as the death candle and the revival candle. All right, so it's kind of in this sense, death candle going up and then revival candle going down. All right. In other cases, it would be death candle going down and then revival candle going up. All right. So this is exactly what I want to see. At this point right now, I want to take shorts. I'm looking to take shorts. So we got that candle closure from that 2 minute inversion. For me, I usually like to put my stop loss about like 30 points above my entry. So something like this, like I like to put way above that inverse fair value gap. And now what I'm going to be doing is targeting that opposite liquidity that I was looking for. Now, a lot of people want to target 1-to-1, you know, maybe like the closest draw, maybe the like market open low, whatever. I like to target the opposite liquidity. So we can see that we got that London session low right here, this line right here. And that's exactly what I like to target. All right, so let's draw this line out. That's our London session low. Now, another thing I like to mention as well is going break even. Going break even is very, very important when it comes to trading, because if you're taking a trade like this, you're taking a 1-to-4 trade like this, and then price goes all the way down here and then completely reverses and stops you out, and you end up losing that 30 points. You just lost that for no reason. Like, you could have 100% stopped yourself out of break even and be, you know, risk-free on the trade, making no money. Obviously, sometimes it happens. It happens all the time. You know, I get break even all the time, and that's just how it is. You have to be okay with that, all right? So when it comes to moving your stop loss to break even, I like to give the trade a little bit of room, okay? So a lot of traders, they find the most recent liquidity point, something like this. Now, it's fine, okay? It's fine to go break even so close. However, that's only 17 points. Now, 17 points is not that big of a move. Price usually moves 10 to 20 points within a minute. As you can see, like take this candle, for example. That was a 20-point move. There's a chance that we might want to reverse and stop at break even. So what I like to do is I like to have my stops a lot lower than a lot of people. Okay, so for example, or my stop loss to break even a lot lower. Okay, so for example, in this case, I would like to probably have my stop loss somewhere below, or stop loss to break even somewhere below this point right here. So in case price wants to actually come down and you know, at this point, if it comes down and I move my stop loss to break even, it reverses, I lose no money. But if I had my stop loss originally where we placed it, it moves down another point and then it reverses, I'm completely out of this trade. So this gives me that sense of, okay, I'm in this trade and I'm going to be in it so that I don't lose, obviously, and I'm not losing too much money. So let's take a look exactly what happens now. Boom. Okay, this is already telling me what could have gone wrong. Okay, so let's just say our stop loss was right here. Stop loss was right here. Okay, cool. Stop loss to break even is right here. We move stop loss to break even, and then boom, we get stopped out immediately. All right, let's take a look. So keep in mind, this is our break even point. So at this point, this entire move down, we are already at break even. So I'm not worried about this trade anymore. I'm completely risk free. I don't care what happens to it. If it stops me out of break even, no problem. Boom. Alrighty. That's it. I'm out. That's all you need. This was about 45 minutes, so it's a little bit longer than I usually like staying in trades, but this works. This just shows to go that this works. Now, I actually am very curious. I don't really know what happened this day, but I'm actually very curious to see if we ended up moving lower. We can see that we have this I'm assuming it's like a 5-minute or 15-minute fair value gap right here. Yeah, perfect. This is a 5-minute fair value gap. We retrace back into this. And, you know, this is a really good re-entry point as well. Like, for example, if you miss this entire move down, there's nothing wrong with that because this is still moving. Like, you could 100% enter on this. You know, stop loss right above that fair value gap right here. And then, you know, you want to target that low. It's not a problem. Let's see what happens with this. Boom. That's it. That's so fire right there. That's literally game right there. Let's see what happens if we keep going. See, did we get the Asia session low? Boom, there we go. Okay, and holy shit, we can see that we are moving even lower. Let's see if we target this low. Let's see if we can get this low. Boom. That's it. That's all you need, bro. That's it. So that entire move was created literally just from this London session high liquidity sweep and that 1 minute inverse fair value gap. Obviously, you could enter just based off of a fair value gap as well. I just personally see fair value gaps being the best entry point and giving you the best RR for trades. Now, there's nothing wrong with missing this and taking these shorts because you could tell that still worked. It's still respecting that London session high liquidity sweep. All right. So this is a perfect example of the trades that I take literally almost every single day. Let's find another one. All right, so for the second example, I'm actually going to be using the trade I took on Monday because this was a perfect example of the trades that I literally take every single day. Now, like we were just talking about before, let's get straight into the bias. So we could see that. Oops, let me get back that. Let me get that back. Okay, what do we see? We have a huge impulsive move up, creating a 4-hour fair value gap. So if you look at the higher time frames, you'll see a 4-hour fair value gap. You can see on Sunday, we opened all the way down here. Now, London session came down, swept this low. So this is already telling me that we want to see potential bulls. We also see on the hourly time frame, if you zoom in a little bit, we can see that we have a 1-hour fair value gap, and also we have another fair value gap. What is this telling me? We want first to sweep this London session low, create an inverse fair value gap, and target the opposite draws and liquidity. Now, obviously, if you don't know already, fair value gaps on higher time frames are still, I consider them as liquidity points almost, because it's kind of like a magnet. It's like a magnet almost. So what do we see? Making a very nice trend down. Technically speaking, I am very bullish on this day because I want to see price to move back up and then make a move down. Okay, so what I want to see is, all I want to catch is literally just that move up into one of these two fair value gaps right here. So I'm going to show you the exact trade that I took for this day. So let's see what happens when market opened. All right, boom, straight to the downside, making that initial London session low sweep. Okay, and let's see what we got right here. We got two inverse fair value gaps that we have right here. This is kind of like our inverse fair value gap range, and I want to see a closure above so I can then target either this draw or this draw. All right, so let's see what happens with the next candle. Impulsive move up. Boom. This is exactly what we want to see. Now, you could have 100% entered based off of this inverse fair value gap. It's a little bit smaller than I usually like because this is like teeny tiny. I don't take that. That's too risky for me. We did get it, but like we have a fair value gap right here. We could 100% close inside of it, like just exactly how we did here, and draw lower. So I like to wait until we close above that entire range. So this is a perfect example of how I would enter longs. All right, we got the closure above this inverse, and this inverse, which also is that same inverse range right here. Entering longs. My stop loss to RRs are kind of messed up on this. Like it's a huge RR, and I targeted actually the equilibrium, this fair value gap. So the RR is almost like a 1 to 2. I can't exactly remember where I had my stop loss. It was a little bit. I had it a little bit like something like this, maybe. I don't really know exactly. I'll look back later after I'm done with this. But I targeted exactly like this, and let's see what happens. Boom, straight to TP. Now, all right, I could have 100% held higher because look what happens. We target that other fair value gap that we have, and boom, this is exactly what we're looking for. Just like that. All right, so this is another example of price doing exactly what it is meant to do. Target that liquidity. So I'm sorry, first sweep that liquidity, find that execution, and target the liquidity. You have to think of liquidity and higher time frame fair value gaps as like magnets, okay? Price always wants to, I'm not going to say always, but 80% of the time wants to retrace back into those areas. All right, so closing with that, I can guarantee you that if you put the work in and you actually focus on working on the strategy and stick to the rules that you set for yourself, I can guarantee you that this will work out for you. All right, I grew about a 75 to 80% win rate with this strategy. It's very simple and easy to use. As you can see, there's only 3 easy steps, while other traders have, 7 steps just to enter long. It just doesn't make sense. So try the strategy out. If it works for you, it doesn't work, whatever. Hope you guys learned something new. I hope you guys have a good rest of your day. Peace out.
Okay.